Joining us now, though, from Dallas, where there's no snow there. The Cowboys, though, they're out of the playoffs. Did I mention the Tennessee Titans are in? That's right. I'm in, you're out. I tell you what, when you haven't been in the playoffs in 10 years and you've only got 1 week that you really are sure you're going to stay alive, then you can gloat a little bit, right? Tennessee's in, Dallas is out, Tennessee's in, there's a bunch of teams. Ravens are out. All you fans in Baltimore, sorry you had to endure that debacle on Sunday. Too bad. Anyway, I guarantee a victory. Titans in Kansas City, I guarantee it. Like Joe Namath, 69, guarantees a victory. Absolutely no question about it. Joining us now, Hal Lambert, the creator, the founder, and the mastermind behind the brilliantly conceived MAGA fund. This is a fund that Hal has put together where he has put together companies for stock investment purposes that are going to benefit from Trumponomics and also don't give money to left-wing loonies. So it's a good investment to make, and his fund is up, and we want to know what the future holds. So he's joining us now. Hal Lambert, great to have you back, Hal.
Great. Thanks for having me on.
Hal, I tell you what, every time I get you on, I get so excited because I love the MAGA fund. First of all, I like just saying it. MAGA fund. I mean, it sounds like really cool. And we've got the tax cut passed now, so I know you've got companies in your fund that are going to benefit from that. And as the economy grows, share with our audience some of how you see your fund going in 2018 and why.
Sure, I'm happy to do it. Well, yeah, just to give a little bit of color on it, it's an exchange-traded fund. So it trades on the stock exchange just like a stock. So people can buy this in their IRAs or wherever they have a brokerage account. The ticker is MAGA, M-A-G-A, so obviously a play on the Trump slogan. But the companies in this are all highly supportive of Republicans and also for president. So the companies in here are the largest sector is industrials. So you're talking about defense stocks like Lockheed, Boeing, UTX, Raytheon. So I think those companies are poised to do well again in 2018. They did well in 2017. You've got a lot of oil and gas stocks in here. Oil's now back above 60, seems to be moving in the right direction. And you've got a lot of financials in the fund as well. It's 150 stocks, so it's well diversified, equally weighted, and those are the top three sectors. So you're talking about industrials, financials, and oil and gas, all of which I think look really promising for 2018.
Hal, a couple things I really love about your fund. One is I know that investing in it, I'm not giving money to companies that are giving it to George Soros-based funds and things of that nature that always have driven me bananas. I also like the fact that all your investment stocks in your fund are equally weighted. All right, so I'm not, if I kind of know what they are and I'm looking at things, I'm not saying, well, you know, the energy sector is weighted higher than defense or whatever. So I like the fact that they're equally weighted. Give us insight. I get energy, no question. I get industrial, no question. Why do you see the financial industry how benefiting from Trumponomics?
Well, as the economy grows faster and faster, which it's already started to do, the last 2 quarters have been great, and they're projecting even higher growth for 2018. You should expect, and we've been talking about this for a while, but you should expect interest rates to start to move higher. You're seeing it a little bit, but I think they're going to move higher in 2018. And as interest rates move higher, that's good for banks. Banks make a lot more money when interest rates are higher, so that's good for financials. And then a lot of the banks and a lot of the investment firms, you know, they also manage money, and they're asset managers. So as the stock market goes higher, they make more money off of their asset management fees. So those are the two main reasons I see financials doing well.
Okay, and let's stick with that a minute. So one of the reasons we both see interest rates going up is because of quantitative easing and the recession we've had and the economy, the fact that the economy is growing at 1% or under for a sustained period of time. The Federal Reserve Chairman and the Feds, led by Janet Yellen at the time, thought that they sought to hold down interest rates artificially below their market equilibrium in order to not put additional strain on the economy, right? That was probably a good decision they made because they were able to stabilize things. But in doing so, with what you call quantitative easing or keeping the interest rates under what the market equilibrium would have them, now that the economy is expanding, the interest rates have to go up, right? So it's a matter of how much when, and it isn't a matter of if.
Well, right. The Fed's already made the statement that they're reducing their balance sheet, meaning they're not going to be buying bonds anymore, which are they're going to reduce the amount of bonds they're purchasing. So that's what you're talking about with quantitative easing. And when you do that, that means there's that there's more supply of bonds for the marketplace, which means yields should go higher from that perspective. And then you've got the Fed also talking about raising rates over the next year. So you've got two aspects: the quantitative easing as well as the interest rate increases that are expected from the Fed. So those two things should happen in 2018, especially with the economy continuing to grow and as unemployments continue to drop thanks to this growth and thanks to the deregulation that the Trump administration has done. You're looking at unemployment dropping and more people having jobs, and that's good for everybody.
So, Hal, what happens if you, and I'm going to give you a speculative question, and if you can't answer it for legal reasons, let me know. So you get investors in your fund, and the Democrats win in November. They take over the House. What happens? Necessarily, if you have a lot of stake in your fund, you wouldn't be doing the happy dance, right? Can I leave it at that?
Well, it's a good question. It's obviously speculative. Obviously, President Trump will still be president in November. The question is, will the Democrats do things to harm the economy? Hopefully they won't do that, but you never know. I think it'll be harder to do the regulation and the things that were going on because that was coming from the White House. So when Obama was president, a lot of these regulations were being driven by the executive branch down, and obviously the legislative branch as well. But I think even if the Democrats were to pick up the Congress, I think the market and the economy will be on such a pace and such a track that it should continue to do pretty well. It's hard for the Congress to completely ruin the economy over a short period of time.
Okay, so look, I don't think the Democrats are going to take over the House, and certainly not the Senate. They have too many seats to defend, and the economy is going to be doing too well. And so I don't really know what their policy is right now, other than they don't like Trump. So I don't see it happening. So as your fund continues to mature, do you add companies? Do you delete companies? Like, how does that work?
Yeah, so the way it works is these are all S&P 500 companies. So I took the S&P 500, so that's already predetermined stocks, and screened it for the political contributions of these companies, PACs, and their employees. So that's how it's done, and I looked at the top Republican-supporting companies in the S&P 500. And so as the S&P makes changes to their index, which they do every quarter, this will change based on that. And then after this next election cycle, we're going to review the giving of the companies again and readjust the portfolio based on the giving for 2018. The portfolio changes quarterly based on S&P changes, and then it will change based on the political giving that happens this next cycle.
You're constantly evaluating your portfolio, your fund, basically, to see as changing events happen, do you have to make any changes to the mix?
And it's a rules-based methodology, so it's not somebody sitting around going, oh, this company's conservative or this company's not conservative. We're looking at where they're giving money. And money matters in politics. It matters a whole lot. So, when people are thinking about investing, one of the things people are also doing is they're looking out going, well, I'm not going to buy this product, or I'm not going to buy that product, or I'm not going to, watch ESPN or whatever it may be. But they really ought to be thinking about it in their portfolios as well, because the companies are out there giving money away, and if you're investing with companies that are massively giving to, left-wing Democrats, you're effectively helping support that.
Right, by investing in their companies or buying into funds that carry their companies. So if somebody wanted to buy into your fund right now, what would they have to do?
Well, they need a brokerage account, whether it be at Schwab or TD Ameritrade or any of the brokers out there, and they can simply buy it just like any other stock. Wherever they can buy a stock, an individual stock, they can buy this fund, and they can call up their broker, or if they do it on themselves online, the ticker is MAGA. They also can go to investpolitically.com. That's the website, and that's got fund fact sheets out there, so you can look at the prospectus, and I think people should look at that before they buy it, and I think they should read this prospectus and take a look at the holdings that are in the fund and make sure it's right for them. But it's pretty simple. If they've got a brokerage account, they should be able to buy it.
So, Hal, walk us through. When you started the fund, what was it at? And I know it's been up about 10% or so. Tell me where it closed Tuesday in relation to day one.
Yeah, so launched at September 7th, $25. It closed the end of the year right at $28. I think it's $27.91. So just about 12% up. Not quite 12, but right in that range. And that's what it's done since September 7th. So really good start. Really happy with the performance, and it continues to be everything that we've wanted it to be.
Well, it's going to be interesting, no question about it, as we see that going forward. So that's really all you have to do. But look, you've been up 12%. I know, there's all the disclaimers. You can't guarantee anything, and this is speculative. But 12% return, right? Anybody would be pretty happy with that. I would be pretty happy with that. So, hey, good job there. And let's say I've got a retirement account, or I've got my 401k. Obviously, I've got that in various funds. And I wanted my fund to investigate yours as pick it up. How would I do that?
Yeah, so you can pull up information on it, again, at the website. There's also been a lot of reporting on the fund. So there's a lot of news out on this fund out there. And you can, you can call, if you have a broker, you can call a broker, and they can pull up information for you on it as well. And again, there's a way to contact me through investpolitically.com. They can send an email and request information if they want. So there's a lot of different ways to find information on it. But the prospectus is the number one way that people are recommended to look at from a information perspective.
Right, that's easy to do. And again, to get the perspective, again, give that website out, Hal. Yeah,
it's investpolitically.com. Investpolitically.com.
Can't get over that. Investpolitically.com. I got a text here from Georgia Newport News who says, is the MAGA fund going to drop companies because of CSR, corporate social responsibility, donations? Companies do donate to crazy causes simply because it's good for their image. Is that part of your mix, or is it only donations to political action committees or to political candidates?
Yeah, it's looking at candidates, but what you should probably realize is that if they're donating, if they're contributing to some left-wing socially responsible cause, they're more than likely giving a lot of money to Democratic candidates. So they're most likely not going to be in the fund. But this is kind of the, you can almost call this the opposite of the socially responsible investing funds, which are mostly left-wing. They're green energy and things like that, where they're punishing companies for giving us oil and gas that we can drive our cars in or drive our cars on. But this is almost the opposite of that, where we are looking at political contributions and looking at it from a conservative standpoint versus a left-wing standpoint.
And Hal, I've got another question here from Mike in Virginia Beach. He says, can you do a 401k rollover to a company like E-Trade?
Yes, you should be able to roll you can roll your 401k, especially if you're not employed with the company anymore, certainly. If you're still employed with them, you ought to look and make sure that that's the right thing to do. But you should be able to roll the 401k to an IRA at one of the broker terms like an E-Trade, and in which case you then at that point would be able to purchase MAGA. If you only have 401k money, then you are pretty much stuck with the choices that your 401k plan offers, and it's most likely not offering you the ability to buy exchange-traded funds. It's probably just some mutual funds.
And then I've got Howard in Richmond says, do you have any way of knowing how many people or entities have invested in your fund to date?
I don't know the number of people, but the fund right now has about just under 35 million in it. So it's been a good start. It was, in fact, there was an article in December that put us as one of the top 5 new funds for 2017 by an ETF publication. So we were pretty happy to see that in a report in December.
All right. Well, look, $35 million. People are putting their money what they think they believe. That's nothing to sneeze at, Hal. $35 million is a big number for a startup fund. And obviously, look, you're getting the return on it. Things are going well. It's a great idea. You've got it branded. And I think it's a big opportunity for anybody. And I want to thank you, Hal, for your time. Again, it trades under MAGA. That's the ticker name, MAGA. It's the MAGA fund. And you can get it there. You can also email Hal or go to his website. And again, Hal, give that website one more time.
Yeah, investpolitically.com, and there's a contact button in there, so you could email me with any questions. So, again, investpolitically.com.
Pretty easy to do, right? Investpolitically.com. I want to thank Hal Lambert for being with us. Great idea, Hal. I wish you all the best. I'm in, and, I can't recommend it for anybody else, but I like being able to invest money in a fund that I know my money's not going to candidates that are going to destroy our economy. I want the opposite, and I want Trumponomics.